you want the link to the YouTube page, it's right here. Do any trades today on live? Yeah, we are. Sure. Hopefully, if something presents itself, you don't want to chase it, but if it's there, if it's there, we'll take it. Pretty much already done all my trading for the day, though. Let me just make sure my mic levels are good. Okay, so that's good. Okay. Cool. There we go. All right. Let's get to the fun stuff. The good stuff. Gold, USD, XEU USD. Did it save my trade? No. Okay, let me make sure that I actually save the drawing that I did. Okay, there. So right here is where I hit TP. But before that, I tried to get involved in a sell. Where was it? I have to go to the 4 hour to see. So I tried to get involved in a sell over here once this high was broken but not closed above. Right, so that's like a rejection to me. Do we get the wick? Right, we get the wick that comes up here. So to me, that's a rejection. Right, to anyone, that's a rejection. Right, so when you see price coming up, and then it comes down, right, when it rejects a low, right, like let's say you have right a high, then a low, and in between there you have higher highs and higher lows. Then you come down, you make a higher high. Right, so this is the structure of a bullish trend. We know that, but this here is basically a wick rejection. Even if there's like candles that close above here on a higher time frame, that is a wick, right? So once you look at a higher time frame, you see a wick rejection. Then you drop down to the lower time frame, and then you can see that movement coming back down. If that makes sense. Trying to find the best way to explain that. Like kind of like what happened over here, except it failed to even get to the high, right? But it's rejecting at that high, right? And then it came down. And then when you get down here, even further, you see that we closed below, causing it to push further down. And then, again, what I was showing you, right? A wick rejection down here, right? So the candle, wait, hold on. I forgot that I have overlays on. Okay, but you can't see those right now. Okay, cool. Uh, Wait, are my overlays even on? Oh, those ones are. Do not have my camera on though. Hold on one second. Yeah, I'm not gonna add my face in this video today. I'm just messing around because I forgot where I even put that. I did want to use it. Oh, right there. Okay, that's fine. Yeah, just make as long as you can see the whole chart. When I was over there, I had the chart like all the way over here. I didn't want it being blocked off on the YouTube. But if you're in the Discord, Hardeep. Sorry, I don't know why I called you Harmon. Yeah, this is the 4 hour. So I look at the 4 hour and then I drop down, but you can go from any higher time frame. It can be the daily, it can be the monthly, it can be the weekly, right? But when you see these rejections, that's when you're getting involved in a trade. Not right away, but that's when you can say like, okay, did it close inside or did it close outside? Right? So like this candle closed inside of this range, right? It closed inside. It closed right here. Right? But we made this range first. Then the next candle came out of the range at the low, but couldn't close outside. It closed inside, and then that's when you're looking on a lower time frame to see where you can get in, right? To potentially ride it to the whole, for the whole range, but at least halfway. Okay. So it's super effective for being able to stay disciplined and for managing your trades to the point where you're risk free after you get to halfway, and that's all you really need, right, to capitalize off of that move, to understand where you are. So, anyways, fast forward. I tried to get involved in a trade here and a sell, but we're super bullish, right? And one of the things I need to confirm my trade is a key level. But because there's no key level up here, right? Because we're at all-time highs, there's nothing to work with. It's literally the ultimate, like the highest price that you will see. You get what I mean? Whereas if we come and get sell, so even if price were to come down, at least I have all these key levels, right? I have FVGs, I have order blocks, I have a bunch of key levels, I have breaker blocks, all those things. I have 3 of them actually right here. So this whole area is a key level. This right here is a breaker block, but inside of there we also have a FVG, right? Which is why you see like when we came down to this FVG right here, fair value gap. That's hard to draw. This is the FVG right here, right? There's a gap in between. We come down into that gap, right? So that's our key level, and then we're looking for entries for buys, if we're seeing something, maybe on a lower time frame, right? But in this case, I wouldn't have seen anything because there's no wick rejection. It's just candle closure. Sorry, it's just a candle open and then a candle closure right here, and then a candle open and then it closed up here, and that's where I got my trade on a lower time frame. Or that's where I would have liked to get it. Oh no, yeah, that's where. Okay, that's where I tried to get in. Sorry. So it actually happened over here. I got in here, in the lower time frame, and I actually was up in profit, but didn't decide to close half. Kind of didn't follow my rules there for a second, to be honest. And I really should have, especially because I'm selling in a bullish market, which is fine. You can counter trend trade, but understand that your whole move most likely won't get met. Right? If that makes sense. But like down here was perfect, right? Because 4 hour, right? We're inside of a key level. In this case, an FVG. A key level can be an FVG, an order block, right? And once you know that, then you also know it could be an IFVG or a breaker block, which are the same things, but just understanding what it is. So in this case, it's a bullish FVG. But if this FVG were to have gotten disrespected, right? If it were to actually come down here and close, then it would be used as an IFVG, which is the same thing as an FVG, but just whatever this was, which was bullish, is now going to become bearish, right? And then same thing with order blocks. This is an order block, a bearish order block. It comes up, respects it, but then it disrespected it now. So now it could be used as a breaker block. Does that kind of make sense? Okay, if it closes inside, so like I'll show you right now. So we're in an FVG, right? So we're in a key level. Boom. That's step number 1. Check, right? We could check that off of our list. So now we know we're in a key level. High probability setup inside of those key levels. So we come down to the key level, FVG, right? Bullish FVG. So we're expecting price to come up. But now it's just like, where are we capitalizing? So the first thing we see is that this range right here that got made. When I say range, I just mean a candle, like a high and low, a price range, right? A low point and a high point. So this candle, each candle has a high and low, every single candle. This one too, and it happened, it swept it. But even the next one over is a candle range. These are all candle ranges, every single one of them. It would take forever for me to draw them. Every single candle here that you see is a range. This one got broken out of, this one closed below right here, right? We closed below the range, previous range, right? And then we made a new range, low and high. What happened over here? We swept the low, opened here, swept, came up, closed inside the range. We're not only waiting for a candle closure, but that's the best time is if you can see a candle closure right at the end of the range, right at the beginning of the range in this example. So like right here, if we were to see a candle closure, so if this was a bearish candle, like if this candle for some reason opened up here, pushed higher, didn't sweep the high, came down, swept the low, and then came up and closed here, bearish, that would have been even better. But all we need is a sweep, because once you see that sweep, then we can get down on a lower time frame and look for the move. Does that make sense? That's something that'd be easier to show you in person. But if it clicks, once it clicks, you know, maybe I can draw it over here. Sorry, guys, I'm kind of teaching a student as well. I know I'm live trading on YouTube. We'll get into what we see right now soon. There's really nothing because you could be selling right now, but there's no key levels. So let me just quickly draw this up for the student. I'm not really in a rush. So boom. Let's say you have a candle here, right? This could be a bearish candle or a bullish candle, depending on where it opens and closes. So if it opens here, right, and it closed here, right, then that would make that a bullish candle because the price that it closed at was higher than the open. So we open down here and close up here. That's a bullish candle. But regardless if that's a bullish or bearish candle, you know that this is a high and a low. But and also you'll have a wick. So the wick is actually the highest point, right? The top of the wick is the highest point it's been, and the lowest point down here, right? So price opens here, pushed down, right? Creating this wick, then came up, creating this wick, right? The highest point. So open, low, high, and then it came down and closed here. That's the equivalent. That's what's going on in that candle. So on a lower time frame, you're going to see price come down here, then come up here, and then close over here. So these are exactly the same. Does that make sense, bro? And then so knowing that, right? Once you know that, you can say, well, what's the next candle doing? Let's say the next candle. So we closed here, right? This is a bullish candle. So we closed here. If it was bearish, we would have closed here, right? Because the open would be up here. But either way, let's just use a bullish candle. So we opened and we closed. Next candle. So once this 4 hour is done, the next candle will open somewhere around here, right? Sometimes it can like jump and like gap, but typically around the same area where it just previous finished closing. So it closed, then it opens, boom, next candle opens, and then you get a push up or you get a push down. Whichever happens first, we don't know. But typically that's another thing to remember, keep in mind. Not try to anticipate it and guess, but when you see a wick already at the bottom, that's most likely indicating that this is going to become a bullish candle because we already got our wick, which means price already manipulated lower, and then it's going to come up, right? So it's going to come lower, then it's going to come up, give us our highest point, and then maybe close like something like this, right? So I'm not drawing it very well, but let's just draw our own. Let's just say this was a bearish candle that opened here, right? Pushed down here, then it came up, right? And pushed all the way up here even, but then came back down and closed inside the range. That's what I mean by inside the range, inside the previous candle's high and low. So we closed inside, right? This represents the close. This is the open. This is the lowest point. That's the highest point. Make sense? And on this candle, this was the open. This is the lowest point. This was the highest point, and this was the close. Hopefully that's making sense. Takes a while, but once you get it, it's just like another language, bro. So we close inside the range, and that's where we understand that we get this huge rejection up here and the close inside the range, close to the end of the range. Because different if the candle closed like somewhere all the way down here towards the end already, then it's like, well, I can't really capitalize off that move, that you stay away. But I'm already looking for entry. Once this happens, I'm already looking on a lower time frame for my entry, and then I'm getting involved. But a closure is even better. Just keep that in mind. That's when you can like increase the risk a little bit if you really want to. Right? So knowing that happened there, for example, let's just use that as an example, right? We got our low point, and we got our high point in the candle range. So this is our candle range low, I call it, a CRL. And then this is our candle range high, our CRH. So if we go down to the 15-minute, you'll see what happened there. So where we swept, you actually want to draw it like this. Sorry, I'll go back. You actually want to draw it so that you can see the sweep. So you want to bring it, drag it over for where the candle actually swept it, and then you'll go down to the lower time frame. And this is the important part too. I don't just go from the 4 hour to like the 1 hour or the 5 minute. I go specifically from 4 hour to 15 minute. And if I was on the daily, I'll go from the daily to the 1 hour. If I'm on the weekly, I go from weekly to 4 hour. But in this case, since we use the 4 hour, we're going to the 15 minute. It's just using time frame alignment. Something that when I teach you, I'll have you write notes and test you on it. But that is the time frame alignment that we need to use. Okay, so boom, we close, we come out here, right? So this is our 4 hour candle range, and then we get the next 4 hour that sweeps the low, right? Because in this 15 minutes from here to here, where's 4 hours? From here to here is 4 hours, right? You can see it says it right there, 4 hours. From here to here, 4 hours. And then the next candle opens, pushed lower, giving us this wick, right? That wick that you see here, that green candle wick, that is that wick right there. This portion underneath is the wick on that next candle, right? Because if you break it up candle by candle, right, this is the 15 minute, but if you look at it, right, you see 1, 2, 3, 4, makes up 4 hours right here. So this is 4 hours. You could draw a box. That's one 4 hour candle. Then the next 4 hour candle opens here, pushed lower down to here. So this would be 1, 2, 3, 4. Boom. Next candle comes down here, pushes up, and eventually closes up here. Close, right? And then the third candle is the distribution. So the first candle is the accumulation, then the second candle is the manipulation, and the third candle is where we look for price to distribute to the other end. It doesn't always do it right away, but 4 hours would be here. They're expecting price to distribute now to the other end. And it pretty much, for the most part, it actually did at least halfway of that range. So from here to here, oh, wrong thing. From here to here, we went halfway. So we would be taking partials off here and moving our stop loss to break even. Does that make sense? So what you're mainly focusing on is that manipulation phase. So once we manipulate, we're already looking over here for the first time price came out of there, which is this candle right here. So I'll mark it with a white box. Okay, so this white box represents that candle, that first time that price came out of there. Price came out of there. We need a closure above that now. So the first step is identifying the range and making sure you're in a key level. Right, so we did that. Now, once we see the manipulation, right, so a wick, first time price comes out of that is this candle right here at 2 p.m. That's when I'm like in the call in the Discord saying like we have potentially a buy set up here. That's when I'll be saying that. And I'll say that we need a closure above, et cetera, on the 15 minutes. So boom, we get a closure right here. Candle closes here. Now this is where I'm saying set your limit order. Okay. So if you set a limit order, right? Once you see that close there, now you're setting your limit order. You're setting your limit order for the beginning of that white box, that candle that came out. So the highest point of that candle that came out. So boom, we come over, we can see that this is where we would have got tagged in, right? Aiming for the high of that range and keeping a 1 to 4. And then you can see that we don't hit TP, but we get pretty fucking close. And it would be up to you. If you get close to TP, if you're getting close to that area, you can use your own confluences, your own understanding of market structure, right? You can see that we're over here. We have like a order block. You can see there's order block in here, which then turns into a rejection block. So it's like this area of support is now resistance. So around this area, you should have been getting out, right? It's pretty close to TP anyways. So you have to make the decision to just say, okay, I'm closing all of it. But either way, by then you'd already have closed half and moved your stop loss to break even. So you don't really care. It's up to you. You know, at that point, it's like, why not just see what happens? Because you already secured the bag. Now, if it comes down and takes you out, you didn't really lose. And on top of that, whenever I have a setup like this, typically what I like to do is enter another position again when I get back down to here. Especially if we're super bullish still, I'll take that entry again at the stop out. So I'm doing it again to the high and leaving my stop loss at a 1 to 4. And you can see I could have even done some crazy shit if I wanted to. I could have done like a 1 to freaking. Actually, no, I couldn't have done like that. But like, you know, just to be safe, just from what I've backtested, you could have done like a 1 to 8. But like that's not like, it's not about shoulda, woulda, coulda. But I understand I've backtested it enough. I'm always doing a 1 to 4. I don't discourage you from going and testing out your own things. Maybe you 1 to 2 hits even better. Maybe 1 to 1 you'll never lose a single trade. That's something that you have to backtest though, and understand what your personality is like and what you know can handle seeing. I like 1 to 4s because I can see a crazy loss streak and still know that like my next trade could literally wipe out all 4 of those losses that I just took. It's all up to you. This is what I want to teach everybody and have them maybe even get better than me. Maybe have a strategy that's exactly the same as mine, but they're going for a different risk to reward ratio. Or maybe they don't go for those impulse entries. Maybe they're more patient, waiting for it to actually tag them in, right? These are little things that all add up. But at the end of the day, price can only either go up or down. So once you're able to identify which side you're on, then you're golden. And that one would have hit full TP. And then that's 2 trades. So you could have got the partials on that one and then took a risk on the next one, understanding the structure and everything that's going on. Then boom, 2 wins right there. There's probably another setup in there too. We usually give you another setup, so we missed. So we got that halfway partials. Then down here, it basically swept again. So it swept the same low. Price swept the same exact low, but again, it swept it a few times. It swept it once, twice, 3 times, 4 times. So those are 4 different opportunities you could have got involved in, or all of them. We don't need to be involved in all of them. Do the same thing on the higher time frames too. Hopefully this is making sense. Yeah. Does that answer your questions, bro? All right, time to get live. Time to get some live trading in. And this is the sell that I took. I took it off of the 15-minute. Fuck, I lost it. So this is one I took on 15-minute. Where was it? Oh, yeah, the purple. So it's a little bit harder to see. But basically, this high of the range and this low of the range. There were some nice buys down here too. You could have got involved in, but before that happened, it was a quick scalp. So boom, we got our range. We come up into a key level, which is what I was talking about, is what you need. But on the higher time frames, it's going to be harder to find that key level. When you're looking for sells right now, because it's just all-time highs, right? So on a lower time frame, you can actually get that key level. Boom. Okay, we come into the key level, right? Right over here, we come into it. We sweep the high right here. Okay. So on the lower time frame, using time frame alignment, so we're going from the 15 to the 1 minute. This is where I saw the opportunity. This is the first time price came out, right? So once we get a candle closure there, right? Technically, no, not here, but once we closed here, that's where you could have been like, okay, we closed here. There's an FEG right here too, so this one's a little bit trickier. It didn't necessarily come all the way back up to the, the area where we would have liked to, but there's a FEG in here, which allows us to capitalize off of that as well. So that's why sometimes I'll just enter right away. As soon as I get the confirmation, I just enter, especially if it's super close to the entry that I would like to get in. If it's super close and it makes sense, just take it. Especially when you're scalping, you want to be quick because these things move quick. So boom, you would have closed. Then in the next minute, it would have made that FEG, and then you would have seen that you could have got in off the FEG. Oh wait, no, not even that FEG. It didn't take into. Sometimes it's not perfect, right? But in this case, again, I don't trade like the 15-minute and the 1 minute. I do it very, very rarely. And when I do, I've noticed that sometimes you just have to enter immediately after that confirmation. Just because it's so close to the entry anyways, it's not going to hurt you. As long as it's not like fucking down here and you're trying to enter still, right? Or like even down here. Like it's super close. It just finished closing. So I'm like, okay, if it's going to go, it's going to go now, maybe without me. So let me just enter. And that's what I did. I entered somewhere around there, aiming for the low of the range down here, keeping it at a 1 to 4. Kind of like that. Boom. And you can see that we immediately hit TP in that. So I made back all my money that I lost trying to sell it earlier and more. Ending the day with a total of $5,000 profit. Was it 5,000? Sorry, 3,786. Made almost 7K on that move. But I lost, before that 7K was made, I lost about 1,400 plus another 900, 800, 500. So about, I want to say about $3,000 I lost. I don't know. I don't know the math on that, but it's 292 plus 596 plus 867. So that's about 1,400 or something like that. Then another 900, so about 2,000, over 2,000. Yeah, about $3,000 that was lost, and then hit that 7K win and made all that back plus more, plus 3,786. Yeah. And that's what trading is gonna be about. You have to learn, like, get in, get out. Take your losses like a champ. Don't revenge. Always have a system. Always use your plan. And you will win. So let's see what's happening right now, actually. Let's just mark this up for the live now. So you see, we're still bullish. We're still super bullish. We already broke all-time highs last night. Was it last night? Yeah, like last night, we broke all-time highs. Like on the 15-minute, it's easier to see that we did that last night. So like 11 p.m. last night, broke all-time highs around 10 p.m. And then it just keeps going up. So don't chase it. We don't chase. But these buy opportunities are going to be the best ones that you can catch. Selling this, right? Like I said, on the 4-hour or higher, like it doesn't make sense because there's nothing to work with. There's no key levels to base it off of. So maybe if we go down to the 15-minute or something lower, then we can start to utilize those ranges instead, right? Right. So like we could mark off this range for this key level, for example, and be like, well, it was a bearish order block. Now it's a breaker block. Especially if we close above this, then it's a bearish. Sorry, then it's a breaker block. If we can't close above this, then it's still respecting this, right? So if it just wicks it, it doesn't close, right? If it looks basically like this, what happened here? It's a wick inside. Like it doesn't actually close past it, right? Because it could just come back down and then close. 10 more minutes left on the 15-minute. So we'll just see. Like, it's just respecting this until it closes there. Then we'll know that it's now going to be used as, instead of a bearish order block, it's going to be used as a bullish order block, but it's actually technically called a breaker block. Just to differentiate the two. Because a breaker block can still can still come back down and be used again as the original order block that it was intended to. But point of me looking at this like this right now is because I would have seen that we had a range down here. We could have gotten to some buys while we were talking. There was literally buys right there, right? Boom, get in, get out, right? I can mark that up for you. So if you've seen, like, there's a bunch of stuff in here. Like there was this bullish order block right here. Then we come up. There's this bullish order block right here as well. Right, so we have a candle that comes down and then we close above it up here. That's our bullish order block. So boom, we have a bullish order block, right? And inside of that bullish order block, there's a bunch of opportunities, but we're gonna capitalize off of this one here that didn't have the high swept until just now. It literally just did it, right? But then down here, if I could go back on bar replay, I can't do it right now. I'll pay for that probably by the end of the week. I'll pay for that. That way I can, when I'm teaching you, bro, I can actually show you, like go back in time and show you how the candle's printed out, which will be better for you. That's why I have people paying for stuff. Cause like, fam, it costs money. Like, I don't need to get bar replay. I don't need to backtest anymore. It would be nice, but that's about $25. I don't mind. That's really nothing, right? But I don't need it. So if you're paying me to teach you, that's money that I can use, right, for resources that will help you. Yeah. So, but what I was saying is, you can already see it, right? You see what I'm trying to get into, right? Like from what I just showed you already. So same thing over and over again. So step one, range plus like a key level. Key level is not that hard to find. They're everywhere, right? It's just understanding what kind of key level it is that you're in, basically. Because there's always going to be a key level. But it's like, you see how there's a key level overlapping each other? They're literally contradicting each other right now. It's a freaking a bearish order block and a bullish order block. And potentially another bullish order block about to be printed here, maybe, if we can close up here. Right? And if it closes up here, that's also telling you that this bearish order block is going to be rejected and become a breaker block. But before that even happened, we still could have got involved, because down here, what happened down here? We swept the low down here, right? We opened, pushed lower. On the 1 minute, you would have seen this is the first time price came out of that range, right? Is right here. And then if you would have just entered right when it closed, maybe wait for it to come down a little bit and then enter, or like, I mean, you really should have your limit order set here, but then again, it moves so fast on the lower time frames, especially the 1 minute, that, okay, so in this example, I probably would have entered and then lost and then entered again as soon as I got stopped out. That would have been one of those scenarios, right? So boom, we set our limit order here. Sorry, wrong thing. We get our confirmation, right? Candle closed, right? This candle closed above the candle that came out of the range. Now we got our confirmation. Now we're just waiting for it to tag us in. So boom, it tags us in down here. It comes over here, does this crazy ass wick that tags us in, yes. But it also would have stopped us out immediately. Cool, that's fine. Because guess what? Immediately after getting stopped out, every setup, I give it one chance again. So boom, we get stopped out. As soon as I get stopped out, maybe I get a better price down here. Maybe somewhere here. I just know that I just got stopped out and I'm just trying to get back in. Based off of this understanding down here, based off of this level. You want to be looking over here, not being like, oh, I missed it, and like, oh, let me just get in, or even if it's up here. No, you want to get it when it's around this area that you got stopped at, whether it's down here, or a little bit above it, right? You want to be basing it off of as if you were to enter down here. Even if you miss it and get in over here, just base your projection off of that exact stop out. Does that make sense? Because price could end up coming up here. Don't follow it and be like that. Oh, I want my 1 to 4 from over where price is now. Because it's always going to move. Just keep it to where you would have had the 1 to 4. And even if you don't get exactly a 1 to 4, maybe it comes up a bit. Right? So this would have been your 1 to 4. but maybe you don't get in exactly where you got stopped out. Unless you put a limit order there. Unless you're like, okay, I entered my trade here. Okay, you're in your trade. It doesn't go directly to your stop loss, but it's about to go to your stop loss. And on the way there, you put a limit order so that as soon as your stop loss gets hit, you're also triggered into another position. That would be smart because then you get the exact 1 to 4. So boom, you get stopped out, but immediately you get a freaking sniper entry that literally only gets what, like, how many points is that? Only like 10 points into drawdown, and then immediately comes up to TP, bro. I have to use the washroom. I really have to use the washroom, bro. I'll be right back. All right, I'm back. So we actually entered a cell when I was in the washroom. Not sure if you saw it. So we're in profit. And if you didn't get in right away, like if you actually waited, right? So what are we looking at here exactly? We're looking at the 15-minute. We're looking at the fact that we're in this bearish order block. Then we have this bullish order block down here, but we're in the bearish order block. Come up, sweep the high up here, right? And then especially getting a closure in the range as well, that's even better. We go down to the lower time frame, right? We see the first time that price came out of there was right here, right? So once we closed there, why does it look different on here than my phone? Hold on. Oh, it just looks a little bit different. Let me just clear everything just to make it easy to see. Okay, so I'm looking at this range right here. You could have also been looking at this one here, right? Because this one also got swept. Would have been cleaner. But also this here as well. This is also a range. It's even better because the low hasn't been taken yet. So let's just look at that one. And that's what I was looking at. So key level, right? Our order block, bearish order block right here. And then from there, it's just like, yeah, we're bullish, but that's not really what we need to focus on right now. We just need to capitalize off of this range, this price range, right? So 1 minute time frame. First time that price comes out of there, right here. First price to purge the high, right? And then once we get a candle closure below there, which looks like right here, right? No, not there, not yet. Right here, right? So we close there below the orange line. I just made it orange. I'll make this orange as well. So closure below the orange. I entered right here. So pretty much right when we closed, I like pretty much entered or like let it come up a bit, but I was looking for my entry already on my phone. So somewhere in this area, I'm looking for sells, but you could have just waited for it to come up, tagged you into your limit order. Right? Never be scared to be patient for limit orders to get hit either. Never try to anticipate it unless you have experience. But even then, just really just sitting patient is the key. So you could have gone for like a 1 to 6, right? As long as you're keeping it above this order block that just got made. But I mean, I go for 1 to 4 just because every single time. I'll do more back testing and research on that, but for now, I just go for a 1 to 4. You would have got tagged in, right? Candle closed right here. Candle closed right here. You're looking for your entry now, so you get your limit order or you enter whatever you want to do. But for me, go for a 1 to 4, and we'd be in profit right now. Grab our Fibonacci to see the range here. So halfway of the range would be down here. So I'm gonna set a alert. You could even open another position, separate position, and have that TP be the 50% of the range. But if not, you could just, if anything, you could just watch it and have an alert set. So that when it comes down here, you can start to take partials off and move your stop loss to the entry to break even so that you will have a risk-free runner. So until then, we still have the same stop loss. I think this would be my final trade because it's getting late. We're in the PM session almost now. I'm already up for the day. I'm risking $1,000 out of the 3,000 I just made. So if I lose the trade, I still make around $2,000, just over $2,000 for the day, which is really good. If I don't win, then $2,000 is great. But if I win, that's a whole nother story. That's an extra $3,000 in my pocket. At partials, it's gonna be about mm, well, at full TP that's an extra 2,500. But with partials, it'll probably be about 2,000 or just under there. Another 1,000. Just say 1,000. Just an extra 1,000. So either I lose 1,000 or I make 1,000 or more. Potentially more. Hopefully I make the full TP, but that's not what we're here to do, right? We don't care about full TP. I used to be so attached to hitting full TP, but you gotta just kind of accept what you can get and understand that yeah, you can hit full TP, right? Which is good to know that you have the skill to do it. But once you see a certain amount on your screen that you're okay with, take it. You just can't be messing around with the numbers too much to the point where you're losing more than you're making. That makes sense. So if you're gonna take the full stop loss all the time, why not try to always take the full TP as well? Not always, but relatively as much as you can. What are my settings for the fib? I'll send them to you. There you go. So we're up 200, 232, 235, 229, 211, 196, 205. We're up right now. Just gonna let that sit. Nice entry there. Nice entry. It follows the checklist perfectly. Right. Could this blow past and stop us out? Yeah, for sure. Price can do whatever it wants, but we understand logically that we're rejecting this high multiple times. But maybe on the third or fourth time it will break. But we'll have to revisit down here, grab more liquidity, and then push up. All of this internal liquidity has already been taken, yes. So we'll see. There's still some liquidity sitting down here on the higher time frame. Ooh, and I just seen that on the 4-hour. This is perfect because on the 4-hour we're now getting what we like to see. We have an hour and 40 minutes left, so it's pretty close to the end of the 4-hour. Not quite, but it's better than seeing like 3 hours and 30 minutes or like 2 hours left, right? It's pretty much done, and so you can kind of tell that this candle may close inside here. That would be even better if it closed closer to the range, the end of the range. It would be better if it closed inside the range, closer to there. If it closes outside the range, I mean, it can still have potential to move down, but that's when you should step out. You shouldn't really be involved. But right now, we already could be locking in on the 15-minute and seeing that this is the first time price came out. So the low of that candle right there, I'll make it white. Right. This is the first time price came out, and we'd want a candle closure below there, and then price can continue going even further down, at least to the 50% of that range. Right, I hope all of this is starting to make sense to you. It's all fractal. So like on the 4-hour, we could also get a setup that closes here, confirms our entries for sells on a bigger time frame, and then ride it all the way down to here, right? Which we might even be able to do with our TP. So like if we hit TP on our scalps, and then it's like, well, it closes here too, and if we actually keep our eye on that, right? Because it might not actually hit TP yet, but it could be like around TP, and then get a closure. Oh yeah, I would like close like most of my position, but then let the rest just run for that big fucking move because it's gonna be even bigger. It's a bigger time frame. Every like there's gonna be more points involved. These candles are bigger. More points. I mean, so yeah. I mean, I'm drawing a whole lot of stuff on the chart now. It is getting kind of confusing. I know what I'm looking at though. really care. Whenever someone makes fun of your chart, I mean, like, to an extent, right? Like sometimes it is just a little bit too noisy, but this isn't even that bad because we only have two ranges that we're illustrating here. We're only looking at the 15-minute range, which actually I lost. Where was it? Oh yeah, right here, the 15-minute range. What is going on? 15-minute range low, 15-minute range high. I'll make those like purple or something. So the purple lines are the 15-minute range. The white lines are just like I mean, it's another 15-minute range as well. But it's also that bottom one is just the confirmation for 4 hour. The 4 hour range. The orange is the 4 hour range. So the orange is the 4 hour range, which we just swept the high of. The purple is all a 15-minute range, and then the white is also a 15-minute range. All of them are telling us the same thing. So let's just see what happens. We're in drawdown now. Minus 300. Gotta wait. I get stopped out. I'm done for the day. I mean, you can continue, but at some point you have to realize you made 3 bands in a day, in like an hour, and just call it a day because you want to do other stuff. Yeah, this is probably a loss. I'm not gonna lie. It's probably a loss, but you could mean you see how much points we went up. That was 20 points easily. We were up. We're not done until it's done, right? Like it could still turn around. It hasn't gotten stopped out, but usually when it gets this far, I mean, like, yeah, you just let it run. But I'm done for the day. Very dangerous taking sells when we're at all-time highs. On the lower time frame, I tried to capitalize, but we're also stuck in between these two order blocks here, and we're about to make a bullish one. We just got stopped out, minus 858. We're still up 29.28, so almost $3,000 still up for the day. I am gonna end it there though, because I want to go do some stuff and enjoy my day. There's really nothing else unless the market comes down and gives me a nice buy setup. That's what I would really want, is a nice buy setup. So I want price to come down and then capitalize off of those buys. But we should just be patient to wait for it to come down and set it up. So we'll refresh this chart, right? Clear all the drawings. I already understand we just broke highs. We just made all-time highs again, new all-time highs. So it's a little bit scary right now to be selling. But if we can come down into a key level, oh, my mic was muted. So this is making all-time highs. Um, we're done for the day. We're done for the day. Still made a good amount. Still made like a good 3% almost for the day. It's not too bad. I still think this can sell down, but it's very tricky at all-time highs, bro. You gotta just kind of wait for those buy opportunities more than anything. You're not trying to win all of the trades. If you try to win every single trade, you're gonna beat yourself up too much. Like this 1 hour is looking pretty nice. You know, we got an order block right here. I'll leave you with something just in case you decide to take it. This is an order block right here. We just swept the high over here. I don't know. I won't touch it, but you can tell, you can see what's happening. We swept the low, right? Then we swept the high. It's just these lows are targets. These lows and these highs are always going to be targets. That's the way you can maneuver around the market. Once a low gets taken out, it usually will come retrace. If it's going to make a lower low, then it's still going to retrace, but that, has to come back down and grab liquidity. Vice versa. I'm getting confusing now. Like in a bullish trend, a high is broken, we got to come back down to grab internal liquidity, and then price will move. And if it's going to make an all-time high, it has to come down first. So we made all-time highs. Maybe it comes down first to continue to make all-time highs and higher highs. It's kind of like trippy right now, though. You don't want to be a fiend. Like, I really could be trading this and be like, oh, the high got swept. Okay, oh, here's the low. Okay, 1 minute. What does it say? First time that price came out is right here. I could literally be like, okay, boom. I'm going to sell right here. Okay, and then boom. So it closed. Would have got tagged in. Right here. And then look, you'd be up right now. I'd be laughing right now, right? Exact same model I just showed you. But at some point, you just got to call it a day, bro. You got other things to do. You got a family. You want to enjoy your day. That you don't want to be a slave to these charts. And you'll find the more you trade, you'll actually end up losing money. Just take your money while it's fresh, while it's hot, and then just leave. And if you want to trade, if you actually feel like trading, you're in the mood, protect your capital, though. Like, so if I make 1,000, I'm not going to go risking 1,000, right? I'll drop down my risk to secure the bag for the day. And maybe I end up making more. But at least now I know if I lose this next trade, I'm still making 500, and that's what I'm walking away with until the next day. Yeah, we'll just restart the chart. You can watch the recording. I'm gonna post it just now, and then I'll go and enjoy my day. Maybe I'll do Asia session again. Actually, no, I can't because I have to do a call. I have a couple calls tonight. But yeah. Well, I'll catch you guys in the next one. It was a good session. It was quick because I wasn't waiting on the 4-hour time frame. Maybe that's what I'll do from now on, is I'll just scalp, especially when it's at all-time highs like this. Because like I was saying earlier, there's no key levels to work with. Like when you're in the 4-hour, like, yeah, it looks pretty. It's giving me what I need or want to see, right? But there's missing that one key component, which is the key level. So to the left, there's nothing. There's nothing to tell me to sell it off of there. But if it comes down, we do have these key levels to work off of for price to tell me that it wants to go up, right? I don't know. I don't know. It's tricky at the highs. You can still do it. You can still hit it up, right? As long as you understand it's rejecting the highs. But don't be upset when you lose, because you will lose a lot more when you don't have a key level to work off of, right? And you would have seen that would have won right there. Remember what I was just marking up? So boom, boom. Entry would have been after this candle closed. Get tagged in on your limit order. Once it closed, you set a limit order right there. TP down here, 1 to 4. And that would have been super clean. In and out, in and out, in and out, in and out, like a bakery. Damn, I actually think that scalping is the move. At all-time highs, we need to scalp at all-time highs if you're gonna sell. Yeah, bro. Anyways, take care. I hope you're looking forward to this. I'm looking forward to this. It's always exciting getting a student. I used to do other stuff before in the past, so I've had clients, but like this is more personal and me actually sharing what I know instead of like selling them in like an automated system. I rather you learn how to do it. So even if you get involved with robots later, or just investments, you understand how it works in the back end. And you should never really be scared as long as it's in the hands of the right people. your stock investments, dividends, Bitcoin, whatever, just long-term growth, long-term holding. And then this trading shit is just you can long term, you can in and out, but you understand the back end completely. All right. Take care, man. Take care, everybody. I hope everyone has a good day. I hope you learned something from this video. If you haven't, watch it over again or comment something that you might have a question about so I can improve the videos. Or just go back and watch that video explaining the strategy that I use. I'm still trying to work, obviously, ongoing, trying to work at making better content that's easier for people to understand. But if you have questions, please ask so I can know exactly what it is that I'm missing when it comes to portraying what it is that's in my head. Take care, guys.